Dollar Swiss technical analysis for the upcoming October 18th Forex session has us looking at the Monday candle. As you can see, we did get a little bit of a bounce here. Now, the real question is going to be if the buying of US dollars in general continues. Keep in mind, the Swiss National Bank is trying to drive down the value of the franc in general, so most Swiss related pairs are now simply a buy only proposition, and the US dollar versus the Swiss franc isn't going to be any different. The area of the 90 mark will constitute possible resistance, and we didn't manage to break above that. So, in order to go long in this long only pair now, we need to see a daily close above the 90 mark. And until we get that, there's really not much we can do because certainly we don't want to short the dollar against the franc for fear of intervention. As the world gets rid of risk, goes into a risk off mode, it should be noted that the US dollar is the favorite. Now, traditionally, we've had the US dollar, we've had the Swiss franc, and we've had the Japanese yen, all being safe haven type currencies in these type of situations. Well, with the Swiss franc being actively canceled out by the Swiss National Bank and the Japanese yen being intervened against by the Bank of Japan, it only leaves the dollar as a safe haven currency. So because of this, we actually like buying the US dollar Swiss franc pair in times of global risk. Off type trades, fear. This is exactly counterintuitive to anybody who's traded for any length of time because it used to be the other way around. But in this situation, since you can't buy the franc and the Swiss are actively going to be working against you, as the markets get shakier, we want to buy this pair. We want to see a daily close above 90 as it would signify perhaps a return to the bull run, which we think will run to parity, perhaps even higher before it's all said and done.